I wanted to talk about Joint Rule 10.5, which probably means little to most people. But if you have any interest in the fiscal committees, the Appropriations Committee, you might be familiar with Joint Rule 10.5, which guides the legislature's lawyers, those in the Office of the Legislative Counsel, in help determining whether a bill should be defined or keyed, as they say, as a fiscal bill. And a bill that is classified as a fiscal bill has a different, sometimes tougher path through the legislative process. If the attorneys in the Office of Legislative Counsel determine that a bill is fiscal, then that measure is to be referred to the Appropriations Committee in each house. And if a bill is not keyed fiscal by Legislative Counsel, then it will normally only be sent to a policy committee or two for a hearing. Now, the appropriations committees can request a bill and potentially receive it from the Rules Committee, even if a bill hasn't been keyed fiscal. My question is whether or not the language in Joint Rule 10.5 should be changed or modified. For example, bills that generally affect California's civil court system have historically not been keyed fiscal by the Office of Legislative Counsel. So, for example, bills to change certain statutes, such as those contained in the Civil Code or the Code of Civil Procedure, that might actually result in more cases being filed in the trial courts of the state, are generally not keyed fiscal. Now, that seems contrary to what we might view as a generally accepted definition of a fiscal bill, because obviously increasing the number of cases that are filed in Superior Court is going to add to the court's costs and certainly cause cost pressures on the trial courts around the state. However, the language of Joint Rule 10.5 isn't currently that broad. So the text is basically four possible scenarios where a bill is to be re-referred to the fiscal committee of each house if it would, one, appropriate money, two, result in substantial expenditure of state money, three, result in a substantial increase or loss of revenue to the state, or four, result in substantial reduction of expenditures or state money by reducing, transferring, or eliminating any existing responsibilities of any state agency, program, or function. There are some other provisions in there, but they don't really relate to Joint Rule 10.5 and the fiscal determination. So basically, as I've read to you, there are four instances in which a bill is keyed fiscal by the Office of Legislative Counsel. The first one is relatively easy, a bill that appropriates money. Again, that's easy to ascertain because the language of the bill will actually say, this bill appropriates a specified amount from the general fund or a special fund for a specified purpose. Second is a bill resulting in substantial expenditures of state money. And this one's a little trickier, so I'm going to come back to it. The third one is a bill that results in substantial increase or loss of revenue to the state. And this bill also is relatively easy to determine, such as a tax bill, one that creates a new tax credit or exemption and results in revenue loss to the state. That's going to get a fiscal committee key. Or a bill that repeals a tax credit or exemption, thereby raising revenue to the state. Again, easy to determine. And the fourth and final one is a bill that cuts spending related to a state agency, program, or functions. And this type of a bill, too, is relatively easy to determine because the bill is going to specify in its language that it's reducing, transferring, or eliminating an existing program, agency, or function of the state. So let's return to that second category, the expenditure of state money. Now, for example, why does a bill that would eliminate the use of arbitration in certain specified circumstances not cause the expenditure of state money, as the goal and intent of that and the likely result is that more civil cases will be filed in state trial courts. But the Office of Legislative Counsel says there's probably not more spending of state money to take place in that sort of an instance, and therefore the bill is not keyed fiscal by the Legislative Counsel attorneys. In other words, they argue that just because more cases will be filed in civil court doesn't necessarily result in an expenditure of state funds. Instead, they view it as the workload remaining constant, with additional cases being addressed when the courts get to them. So due to the narrow language contained in subdivision 2 of Joint Rule 10.5, perhaps we could add a fifth category to Joint Rule 10.5. And this would be added to the joint rule to address those instances in which changes to laws, such as the civil code or the code of civil procedure, could result in workload changes to state agencies or programs. So for example, the legislature could add a subdivision 5 to say something like, or result in additional workload for a state agency, department, board, commission, or court, or reduction in workload for any such entity. Now, what would the result be of this additional subdivision 5 in Joint Rule 10.5? It really means that just a handful of additional bills each year are going to get re-referred to the Senate Appropriations Committee and or the Assembly Appropriations Committee. And of course, those committees could give these additional bills appropriate review, but they could also determine that they may not need a hearing, such as with the Senate Appropriations Committee under Senate Rule 28.8. Again, as I mentioned, the chair of Senate Appropriations Committee under that Senate rule can waive a bill off to the Senate floor if he or she determines that there isn't significant fiscal effect at the state level. So basically, amending Joint Rule 10.5, as I've suggested, will not likely result in a lot more bills going to the suspense file in either or both houses. But instead, it should mean that these bills would get analyzed by the fiscal committee staff of the two appropriations committees, and then the members and the staff could determine whether or not there's enough of an impact on state revenue to justify a hearing on the bill, or whether the bill should go to the suspense file or perhaps even be held on the suspense file.